All right, let's get started. Hi, everyone. I don't see you because I'm sharing my screen, but thank you very much for attending this online session of DeFi Next-Generation Finance with blockchain. My name is Mayato. I'm a host of this event, and then I'm going to introduce some of my teammates later. Okay. And then at the beginning, I would like to apologize for our sudden change of our event, switching from offline to online because of the current situations. Okay. So this is going to be our schedule today. We have finished registrations, and then now I'm going to introduce about DeFi Indonesia. And then after that, I will talk about roughly 30 minutes about decentralized finance. And then I'm going to hand over a presentation to MakerDAO community lead in Southeast Asia region, Jocelyn Chang. And then we're going to dive into Q&A after. We plan to finish the whole session at around 8:30 to 8:40. Okay, Slido. We're going to use Slido for Q&A. I don't know. Did you guys, did everyone already see this? Okay. Yeah. Go to Slido. If not yet, go to slido.com and then type 0100, or you can type following link if you want. I think the link is also shared on the Zoom chat. And then you can ask questions in Bahasa Indonesia as well as in English. English is better for me, but I'm happy to take questions in Bahasa Indonesia too. One of our moderators, Danny, can translate for us. Yeah, and then feel free to ask questions on the Zoom chat as well. The other teammate named Taka can help assist that. All right, I would like to quickly introduce our community partner of this event, CryptoWatch and CoinVestasi. CryptoWatch is an open community for cryptocurrency discussion, collaboration, and education in Indonesia. CoinVestasi is Indonesia's leading platform for events and information related to cryptocurrencies, digital assets, and blockchain technologies. They helped us open this event. And then what is DeFi Indonesia? DeFi Indonesia is a newly born community to foster decentralized finance movement in Indonesia. It's a community where community members can share knowledge and information about DeFi, as well as encourage and promote DeFi usage and development throughout collaboration. We have our own catered DeFi Telegram chat, which is shared on the Eventbrite page. And I think Taka or Danny can probably share that on the Zoom link as well. Okay, and then who am I? My name is Mayato. I'm a fresh, I just came to Indonesia this year. My past background, I worked for Ethereum Foundation last year to help set up their event called the DevCon, Tech Focus Conference in Osaka, my hometown. And before that, I worked at one of the crypto project called Omisego as a community manager over the blockchain space in Japan. And before that, I worked at Deloitte, and Deloitte as our one of the enterprise solution teams to integrate the blockchain technology for them. And then right now, I'm a student at the University of Indonesia. I'm studying Bahasa Indonesia, and then doing like local community events throughout the DeFi Indonesia. All right. Since we don't have that much time today, I'm gonna go very, very quickly. And then I have like 60 slides. For today's topic, I'm going to talk about, so this is, I'm going to talk about public blockchain, specifically Ethereum, because the in DeFi area, Ethereum is the leading player. But I'm not going to talk about private blockchain. I'll talk about DeFi as a landscape, but I'm not going to talk about DeFi investment strategy. So no price talk, no coin talk, no market issue. I'm going to show you a demo quickly, but I'm not gonna touch anything about latest market news. So this is going to be an overview of the decentralized finance. All right, so what is decentralized finance? You may wonder, but before, do you know about a blockchain? Because most of the DeFi talk today, it requires sort of the fundamental knowledge about blockchain. So let's take a poll. Let's see. Did you guys fill in the poll? Okay. So in this link, Q&A and the poll, you can answer this. I can see. Oh, actually, I can only see from here. We have right now 2 people vote on this poll. Okay. Yes. Thanks, Danny. I don't see. I think the result of poll is shown here. Okay. Let's see. Oh, here. Sorry. Oh, okay. Oh, so we don't have anyone who has no knowledge on blockchain. That's good. No more polls. You guys can just go to slido.com and then type 01101, 0100. Of course, I know well. Just gonna, so it's now 3 people. Okay, cool. All right, I'm glad that nobody here doesn't know about the public blockchain. But still, I'm gonna quickly brief about blockchain. How about Ethereum? Yeah. Sorry, this is just removed. So in a nutshell, in simply put, Ethereum is a decentralized world computer. What does it mean? It's a computer. Sorry, Ethereum is also called a virtual machine, where every single computer which is connected to the Ethereum network shares the state of the Ethereum network, and then each node, as in the computer, can make a transaction and then change the state, and then that state will be shared, distributed way in everyone, and then everyone can see and verify the state. You might be wondering, what I'm talking about. Okay, what does how does the inside of Ethereum virtual machine looks like? It's actually the bunch of the blockchain, record information, and then this is just example, so it doesn't reflect any real information, but it's that it's a cycle of the blocks, and then in each block has hash of the block number, transaction data, nonce, etc., which is important information for the blockchain. And then transaction will occur. I mean, each block is mined every 15 seconds right now in Ethereum, and they each just keep changing the states. And then everyone can share, and everyone can see, and everyone can verify, and then everyone can make any changes on this state. So that's why it's a single computer on the internet. That's why it's called Ethereum as a virtual machine. And then in the Ethereum network, because it's a secure cryptographic protocol, it can hold asset balance of every account and then transaction record until today. In the, oh, sorry. 2 more minutes for, yeah, thanks. For Ethereum at a glance, as a process, from the, as in the ecosystem, user first, get into the Ethereum network with a Web3 browser called Ethereum Wallet, and then this with this wallet, it's like a bank account. You can hold the Ethereum asset or ERC20, and then it can transact, make, sign a transaction, which means transfer ETH to different wallet or execute a smart contract. I'm gonna brief smart contract later. So basically, it broadcasts a transaction, and then miner receive this transaction, and then they verify this transaction and record into the block, and then they get reward as a mining reward, by doing so. Also, as well as some ETH as a fee from the user, and ETH is a crypto native token of Ethereum. And then Ethereum, blockchain, like what we have seen, it has a consensus, which it's called the Nakamoto consensus, which takes the longest chain as a canonical. Canonical is the valid or legitimate, the block, the chain. Yeah. And then, yeah. So this data can be shared by anyone, held by anyone, and then verify, and then make a transaction by anyone. So this whole decentralized ecosystem, which user does not know who are the miners, it's governed by the protocol technology itself. So nobody, this, trustlessly, this system is maintained, because miners, nobody enforce miners to do that action. Miners do organically, these actions. Same for the users. So this whole ecosystem network is very important in the Ethereum, that maintained in trustless, decentralized manner. Yeah, as we have seen, that's why Ethereum is a decentralized world computer. Some of the Ethereum features, not all of them, but some important facts before knowing about DeFi. It can guarantee internet of money, which means first ever blockchain. This might be seen similar to the Bitcoin, but it can hold the digital asset on the internet, and the asset is always, if it's in the non-custodial way, in the user's control. And then it is permissionless, which means that anyone can access to application to Ethereum and network. There's no one to stop, accessing to the network. And the code is open source. Then the smart contract. Smart contract here, it means the automated, computer code. It's a bunch of the lines of code that is, enforce. It has a functionality to enforce some sort of business logic, automate, automatically. And once users, sign the transaction, so executed transaction is immutable and transparent. So anyone, as I will show you the demo later and how it, what I mean by. But smart contract is very important concept in DeFi. And then it also has an interoperable function in the Ethereum network, because on the network there are a bunch of the smart contracts, but that can be, that many cases they are open source and they can be connected without permission. And then that will create the whole, ecosystem, and then the platform bigger and better. So it's kind of scaling ecosystem. All right, now we can talk about DeFi. So DeFi, decentralized finance, aka, is a it can be defined as a globally accessible financial platform built on blockchain. It has these in DeFi we have these kind of type of products: exchange, saving in USD, lending and borrowing, payment, investment, and lottery. Yeah, looks familiar, isn't it? Because I'm talking to the computer, in front, so I cannot tell, what the audience reactions, like. But anyway, I'm gonna keep just doing. So how is it different from the traditional finance if it looks similar? In traditional finance, we have financial institute in the center, and the user. This is a case of the bank. Very simplified, example. User deposits money, bank receive the money, and the bank use that money to lend to some other users. And then borrowers, pay interest, bank pay interest to the user. Yeah, we know it. Same for the brokerage company for investment and stock and bond or any trading. Users do not invest directly by themselves unless you're the pro trader in OTC. They use brokerage account, and then company basically invest sell and buy stocks for users. Sorry, I'm just okay, cool. And then users receive any financial return on investment. Yeah, it's very simple, right? In this diagram, important to note that the banks and brokerage company, is controlling the money, and then it's sit in the center. Oh, excuse me. So users have to trust financial institute, and the financial institute act for users. In decentralized finance, DeFi, instead of the financial institute, the smart contract, which is the computing code on the Ethereum network, will act for users. Users lend token. This is a case of the P2P lending protocol. Users lend a token, they get interest rate, they get interest, and then other users can borrow token by putting against the, some collateral. And then this whole system is done automatically, but the users have the right to decision to whether they transact or not. Interesting enough, this smart contract can be connected with other protocol with offered by different company. For example, there's a smart contract logic that if deposit, because this lending market is a money market, it can be it has the own interest rate, but interest rate if is less than the other protocol, saving protocol, let's say. In case we have the exact example name, but you can imagine this is a MakerDAO, this is a compound, and then this transaction is made automatically. Same for the exchange. Instead of the financial institute trade for you, users can send a token A and receive a token B. But within the process of the automated smart contract, exchange aggregator, this is not a company. This is a smart contract. It's basically the code, computing code. Source the rate of every single other protocols like protocol A and B and C, and then take the best rate and then transact. Okay, here in this case, protocol C has the best rate to to send transfer token B. It can be done automatically. And then these protocol do not necessarily are not necessarily offered by the same company. It can be interacted. It can be composable across the platform. So I see many questions, but I think I'll take it later. In a nutshell, DeFi has no middleman. Smart contract automated programming code operates like a financial institute, and then code is transparent and verifiable. This is the beauty of the blockchain. Anyone can see how this contracts, basically smart contracts, will act, and then before they make any transaction, and then even after the transaction, make sure that their asset is transferred from wallet address A to wallet address B. And then it's also the globally accessible financial market. It's in the traditional finance, you need a KYC, which means that you need to show provide ID. But in DeFi, it's permissionless. Anyone can join and then access from anywhere. And then this is the global market. And then multiple financial applications, as we have seen, can interact with each other. I'm going to show you the demo later, so probably we have better understanding of what I'm talking about. So DeFi is we can say that DeFi is a paradigm shift of trust from, bank or some sort of financial institute to the smart contract in the blockchain, which is computing, computer program. We can, this is the comparison table of traditional finance and DeFi. In traditional finance, users' fund is held by financial institute. Your money in the bank account is, technically not your money. It's legally yes, but financial, bank cannot take away. But if bank, bankrupt, nobody can help you. Maybe the government sometimes. But in DeFi, it's on the blockchain. The users, because users have their password, kind of password and private key, kind of password in a bank account, which kind of proves that you are the only one who can move that asset from that from that address. And then operation is done by human in traditional finance. In DeFi, smart contract runs every 24 hours, 365 days. In system in traditional finance, tend to be more complex. There are more middlemen in between. And then, however, it can be flexible because in DeFi, it's simpler than traditional finance, but it's the smart contract logic that cannot be reverted. In traditional finance, if your money is lost for some reasons, maybe the bank or security company can help you. If your transaction is made wrongly to someone, some different account, in DeFi you cannot revert, you cannot take it back. In traditional finance, transaction is in black box. You don't know what's where once you transfer money, you don't know what's happening in behind. Only the inside our traditional finance knows. In DeFi, everything is transparent and verifiable, and then it's on a transaction in real time. And then in the service provider in traditional finance, you as a user perspective, you use one type of service like OVO or the GoPay. But in DeFi, imagine that world that the products by financial service can be connected from the from the product offering side. And in traditional finance, there's a credit risk as a user when you borrow the money. You have to trust that guy to pay back. But in DeFi, we have a different type of risk. We have a big risk section after. So this is one of the risks, but a very major risks in DeFi is the smart contract risk. If there's any bug or vulnerability in the code, then your money might be just gone somewhere. And then in traditional finance, it can be only access to domestic service. It can be only access to the people in domestic market, while DeFi it can be accessible from anyone from anywhere by anyone. So you might wonder, is DeFi different from fintech? Yes, it is. Fintech is it's more likely the extension of traditional finance. It make the traditional finance more convenient in the digital way, but DeFi evolves on the completely different path. Although you have seen similar products on similar financial services in DeFi, one of the slides I showed you before, but it doesn't have a strong direct connection with the traditional finance. Everything is completely built on scratch, and the concept might be similar though. So DeFi, we can say that is reinventing a new financial system from scratch. But what DeFi can do, maybe you might wonder, you might not, be convinced by why do we have to, you might wonder, why do we have to care DeFi? These are some use cases of DeFi and benefits or some advantage that cannot be done by traditional finance. For example, in DeFi space, anyone can access, and then anyone can hold financial asset that is within your control. Nobody else can steal. And then you can have, you can buy US dollar denominated currency to avoid inflation without opening a bank account. and then you can lend it and then receive the interest rate that earns every 15 seconds. So you don't have to wait for like transaction plus 2 days or something. It's real time, and you make transfer, make an instantaneous payment to someone in foreign countries without having to pay fee to the middleman, and this is also made real time. And then you can buy no loss lottery. I'm not gonna talk this about later. I'm not gonna talk for today, but if you dig deep into the DeFi, you'll learn all those things. You can also invest in financial asset that mirrors the price of ETF, such as Standard Poor's 500 in the United States without a KYC. You might be worried, like, will DeFi replace traditional finance? No, DeFi is still limited. DeFi cannot do so many things. As I mentioned, DeFi runs on the completely different path. With the DeFi, still so far you cannot trade traditional finance asset such as stocks and bond directly, because it's the DeFi is run only within the blockchain network. Outside of the blockchain network, it's not DeFi. You can in DeFi you cannot do credit finance, borrow money with my credit score. The reason is very simple, because it's permissionless, and then when you transact any lending from person A to person B, they don't know each other, and the protocol itself cannot. There's no way for the protocol to know who is this guy. So so far in DeFi you cannot do credit finance, because once because as a anonymous pseudonym user, they can just take away the money without being any punishment. Yeah. That's why in lending protocol there's over collateralizations. I'm not going to talk that detail. Sorry. You cannot do exchange with IDR or Indonesian rupiah or any other type of traditional currencies, like it's called fiat currency. You can do it at the central exchange, but this is not a DeFi. So simply put, you cannot live within just DeFi activities. Always you have to work with traditional finance. So DeFi is not an alternative. It can be alternative. Sorry. Yeah. It's not the completely disrupting the market, but it can work together. That's what I want to say. So okay, we have still 12 minutes. I'm gonna quickly show you the demo. How does the experience DeFi looks like? Okay, for this one, let's try the decentralized exchange, named the Kaiba Swap. It's a protocol that allows you to swap token X and token Y from the reserve, and there are more than 70 tokens available. Okay, let's get it started. Okay, this is the kind of user interface of the Kyber network, and then this Fox icon. This is your private the public key, your account, which holds your Ethereum. And then now I'm connected to the Ropsten test network, and then I have like 3 ETH, and then I would like to exchange Ethereum. It's a exchange, decentralized exchange. It's run by a smart contract. I'd like to exchange Ethereum to the Kyber KNC token, which is the Kyber network native token. Okay, let's say right now I don't have any KNC. See, as you can see, I have 0 KNC. Okay, I would like to exchange 0.1 ETH to 36 KNC. Oh, I have to connect with MetaMask first. This is the account. There are different wallet you can connect. And then, okay, let's swap it. I don't need this. So I can see that from 0.1 ETH to I will get this amount of KNC token, and then there's a transaction fee, not to the Kyber network but to the miners. Let's confirm. And then so this is the user interface that I see as a as a user, do I want to make a transaction, sign transaction? This. Okay, yes, I want. Let's do it. And then, oh, okay, the transaction is broadcasted, as we see, and the miner takes these transactions, and then we have to wait for roughly 15 seconds, depending on the gas, how much you put. If you pay more, then the transaction is settled faster. Oh, I should have made a higher gas, fast gas fee. But yeah, let's wait. It should do quickly. And then you can see, okay, let's wait for a couple of, second. Let's wait a little bit. We can, oh, okay, transaction confirmed already. And then we can see, this transaction was confirmed with the, in the block number 75427, blah, blah, blah. And then this is the ID of this transaction. And then, it's shown that, you paid this much of the transaction fee to the miner. And then what I mean by this, so everything is done by a smart contract. Oh, okay, I'm sorry. So this was a contract made, and then, sorry, it might look a little bit technical overview. I'm going back. Yeah, you have probably no idea, but these are all transactions, made by using that, platform, smart contract. And then I'm now looking at the computing code, it's smart contract source code of this Kyber network. Excuse me. So the background logic, how it works, is basically this code, Kyber swap. So as a user, you can see this transaction before you interact, and then this transaction tells so there's no way as a DeFi provider to do bad things or trying to steal money, because it's always verifiable from the user's perspective. This is what I mean by the transparency. And then, excuse me, I have to go back. So this was the this is my address 0x2885. Here you can see in the contract. Oh, excuse me, this one. Yeah, from this wallet address, it was transacted this, and then it will now token is transferred back to me. So this information is, everything is transparent. See, so this is the beauty of the DeFi. Let's get back. Okay, and then we can see how much transaction was made. Everything is transparent on blockchain, how much transaction was made on the network, and then price. Yeah, okay, since we have a few more minutes, 7 more minutes, we can try decentralized lending platform. Now I'm going to show you the Compound. Compound is the money market, allows borrower and lender and then deposit financial asset in liquidity pool and earns interest. Put collateral and then borrow a financial asset as a borrower. And then interest rate is, calculated algorithmic way, autonomous, based on demand and supply. Okay, yeah, this is the Compound, UI, and we can see how much money is in the liquidity pool, and this everything of these informations is transparent. It's you can imagine this is something like you see Mandiri banks, how much money they have in the bank account, and then we connect with the MetaMask like we did, for the. Okay, actual UI is better than this because this is now connected to the testnet, but I'll just show you the user experience. So I want to, so I want to, lend, DAI, the token, denominated to the, pegged to the USD. 10 DAI, roughly means 10 USD. And then I get, sorry. Yeah, here, in the actual, network, it says like, how much, annual per ratio I earn, but this is testnet, so it shows 0%. But you can see the user experience very easy. I want to supply 10%, basically borrow, lend 10 USD in the network. Yeah, I confirm transaction. Transactions broadcasted. Oh, sorry, I forgot again the making the transaction fast. But we can wait a little bit, and then excuse me. Sorry. We can check the ratio interest rate of like all these different type of the protocol lending protocols. Like Compound is this one. You get now like 7% annual interest. And then DYDX 7.53%. Now better than the traditional finance, isn't it? Yeah, okay. Transaction is confirmed. You can see now we have 10, plus 10. So it was 16, before, and then now 26, I put in the liquidity. And then I think I might have forgotten to show, but we have KNC token, that was transacted in the decentralized exchange as well. So DeFi, user experience is as simple as probably traditional finance, or sometimes, more simple, simpler than that. Yeah, but you might wonder, is this just good things? No. DeFi still is still immature and new. So there's a technological risk, which means that smart contract can potentially get hacked. And then if there's any vulnerability, and then in case of for example, Compound, you put your money in, and lock into smart contracts, that might be stolen if there's any bag. I mean, it doesn't necessarily to be the Compound, specifically, but this is a risk of using a DeFi, and then you are the one who's responsible for the risk. And then there might be some unexpected technology invention affect existing DeFi service. There was and then there's also the market risk that crypto asset, because most of the in DeFi space, crypto is necessary to use. Crypto asset, has more volatility than traditional financial asset. And then market is still immature in the sense that it has low liquidity. So liquidity risk is also exists. And then from the users, maybe might be challenging to hear sound because responsibility, as I said, is now transferred from financial institute to the users. There's no customer support. And then sometimes understanding the general concept of the blockchain, public key, private key might be difficult. And then also maybe getting crypto at first hand, crypto, you have to open the either you have to open the centralized exchange account to exchange from IDR to Bitcoin, Ethereum, or etc. Or you can get you can access to some of the platform to get cryptos as reward. But usually still this access to the crypto is not that easy. So the whole space is still new. Please make sure you understand the system and risk involved very well before putting unbearable amount of your asset. And then this is the end of my slide. Important disclaimer. Now that today's talk does not reflect any investment advice. So please, learn further, by yourself, and use service at your own risk with a careful consideration. Yeah. Okay, thank you so much. I have a few more slides, but I'm gonna, because of the time, I'm gonna skip this, and then maybe I might do it during the QA. Pass to Jocelyn. Excuse me. Stop sharing. Oh, thank you. We have a lot of people. Okay, Jocelyn, sorry, do we have here? Oh yeah, excuse me. Make a co-host. I will unmute. Can you speak up and then maybe you can share the screen, Jocelyn?
Give me a minute, okay? Can you hear me?
Yes, we do. We do.
Okay,
Very well.
great. So let me just share my screen in a bit.
Thank you.
So got locked out actually. Screen mirroring.
Okay, I got questions. Can you pause some? Oh, okay, interesting.
Sorry guys, there's a technical.
Really?
Yeah, I'm trying to share my screen, but it doesn't seem like it's working. Hang on, give me a minute.
Do you want me to show you a slide?
Yeah, that's fine too, actually. Yeah.
Okay, let's do that way. And then you can talk and then you can say, next slide.
Yeah, sure.
Okay.
Okay.
Okay, cool.
Okay. Should we start now? All right. Okay. Hi, everyone. And thank you, Mayato, for the excellent presentation. I mean, I was actually, I entered the chat room like, I think 10 minutes before. Yeah. So, hi, everyone. I'm actually Jocelyn, and I work at the Maker Foundation. And Maker is an open source project that which focus on creating an open protocol for financial applications. So at the very center of Maker protocol is the DAI stablecoin. So which is a crypto currency that is price stable to $1. And so one DAI equals to $1. And today I'm going to talk about how DAI and the underlying stablecoin system actually works and how it enables an open financial ecosystem that both companies and social organizations can actually leverage to create business and social values today. So, I mean, back to myself again. I'm actually the APAC community lead for Maker Protocol, and my role is to actually build communities in the Southeast Asia region. So I have ambassadors as well in all these different countries in Southeast Asia. Yep. So let's just move on to the next slide, Mayato. Mayato, next slide.
It's next slide already.
Oh, is it next slide? Oh, okay. I mean, I can still see the first slide though.
How about now?
And what about the rest? Can you see the second slide?
Yeah, this is the third slide.
No, this is the first slide yet.
Yeah, it's still the first slide, right? Yeah.
Okay.
Yeah. Now it's
okay.
Yeah.
So this is the second slide. Yes. So thank you so much for helping. So why is stablecoin needed? And because I mean, I think most of you know about the mainstream cryptocurrencies like Bitcoin, Ethereum, but the thing is, they do not really fulfill the function of money. So which is being a unit of account, a store of value, and also medium of transfer. So I mean, you probably don't want to go to like Starbucks and spend your Bitcoin or Ethereum buying a cup of coffee because this Bitcoin might actually, might very well, grow like, 10 times or 20 times, in 5 years down the road. So therefore, a stable coin is actually needed to drive mainstream adoption for cryptocurrencies, and also to unlock the potential of blockchain technology. So DAI is a good store of value because it's pegged to $1, right? So it's unlike, Bitcoin and or the rest of the mainstream cryptocurrencies where it has got a very volatile values. So next slide, please. Okay. So and the Maker's flagship product, it's DAI itself. It's a stable coin, and DAI is actually the first decentralized stable coin in the whole cryptocurrency ecosystem. So it is built on Ethereum blockchain protocol, and it is fully backed by crypto assets. So for example, like Ethereum, basic attention token, and also USDC, which is another stable coin, centralized stable coin. We just added USDC today, actually. And then it's asset-backed hard currency because it's backed by crypto assets. Unlike, like US dollars today, it's not really backed by anything, but it's just it's really, it's about like, the faith of Americans or US or people, in the US, in US government itself. So it's nothing concrete, but whereas for Maker protocol, it's actually backed by crypto assets, and there's no central point of failure. And because the protocol itself is actually it's decentralized, and it's open and transparent, because all assets backing DAI itself is locked in the smart contracts, which is publicly viewable and also auditable. So today, if you want to look at, how many DAI are being sent from one address to another address, right? You can actually go to Etherscan, because DAI is an ERC20 token. So you can go to Etherscan and look at, like how much DAI transactions and volume there. And it has been live since 2017. The first version of DAI is called SAI, SAI. It's still functioning, but the thing is, we are gradually deprecating the system itself. So today, the latest version of DAI is called DAI. So we just surpassed like 100 million total in total circulation in early of the year. Next slide. Is it next slide?
Yes.
Okay, all right. Can't really see it though. So funny. Yeah, but anyway, yeah. So DAI stablecoin, it's sustained through the smart contract system, and which is built on Ethereum blockchain protocol. So what it does is that it handles the issuance of DAI, and unlock digital collateral tokens, which is the crypto assets itself, Ethereum, basic attention token, and USDC. And then liquidates bulk positions, which I'm gonna share more about that later on. And the protocol also gives administrative powers for Maker token holders. Next slide.
Yeah.
So how does DAI actually keep its peg? So it's maintained by, demand and supply for DAI, right? So the demand curve can actually shift due to different factors, for example, market conditions, the confidence of DAI holders as to whether or not they want to hold DAI or not. Yeah. So whereas for the supply curve, it's actually it's managed or shifted through a permissionless lending protocol within Maker protocol itself. So DAI is just not a stable coin; it is also a permissionless lending protocol. So for example, when the demand actually exceeds supply, demand of DAI exceeds supply, right? What the protocol do is that it will actually adjust the underlying risk parameters, for example, stability fees, so that when someone wants to so that someone will actually mint more DAI by locking up these crypto assets in the smart contracts to generate loans and DAI. So and vice versa, when supply actually exceeds demand, less DAI will be minted. So in this case, any actor can actually vary the supply of DAI through a Maker Vault. So they can just go to Maker Vault. Maker Vault is where you can actually lock up the crypto assets itself. And the system was actually built so that these actors are incentivized to both shift the supply curve to ensure that the price is always pegged to $1. Next slide. So Maker Vault. So what is Maker Vault, or rather, how is DAI generated? Anyone can actually mint DAI or generate DAI through Vault by locking up their crypto assets. So you can actually draw DAI up to a certain limit depending on this risk parameter called collateralization to debt ratio. Today, the collateralization to debt ratio for the system, or rather for Ethereum, is actually 150%. Meaning, if you want to draw out $100 worth of DAI, you need to deposit $150 worth of Ethereum in the smart contract itself. So the entire system is over collateralized. It's always over collateralized at about 200 to 300%. And this over collateralization is to ensure that in the event of a rapid decrease in the asset price itself, the CDP have the vault would not be liquidated because it has got extra values, right, or extra buffer to spare. So so basically, like what I mentioned earlier on, you can actually lock up Ethereum, basic attention token, or USDC in the smart contracts, generate loans and DAI. And if you want to retrieve your collateral, you need to then close down the position, close down the vault by paying down your debt, which is the loan that you take from the vault and plus stability fees. Next slide, please. All right. So so this whole concept, right, it's very similar to getting a home mortgage from the bank. Traditionally, you go to the bank and you pledge your house as collateral and you generate loan. I mean, you take loans from the bank, right? But for us, you come to Maker protocol, which is the system itself, and pledge your collaterals, lock up your collaterals, the crypto collaterals in the smart contracts, and generate loans and DAI against the assets that you own. So, I mean, like, you can see that you're not going through any intermediary. The only thing that is involved here is actually the smart contract itself, which Mayato actually mentioned about smart contract risk earlier on. So which is, like the smart contract that lock up your collateral and then return you collateral when you pay down your debt. So next slide. And so what happens when the value of collaterals fall? A vault is automatically liquidated if the collateral value actually falls too low. For example, now the collateralization to debt ratio is 150%. If it falls below 150%, these collaterals will be auctioned off by the protocol to cover the outstanding debt, and there will be penalty fees imposed as well. Then what happened is that DAI is then burned by the protocol to decrease the supply. And then after that, the vault owner can then receive the leftover collateral from after the liquidation happened. Next slide, please. So this is, whatever that I actually explained earlier on, right, might sound a little bit complicated, but the thing here is that with this diagram, I'm just hoping that, like you can get a good grasp of, who are the different stakeholders in the Maker protocol. So there are different stakeholders in the ecosystem. As you can see on the right, there's the users group, and then on top, there's the maintainers group, and then on the left, there's the governors. So for users, there are two different type of users. There's like the DAI holders that hold on to, that can, just go to a regular cryptocurrency exchange and buy DAI with fiat. So they don't have to really know about, like how Maker protocol works, but rather, they want to hold DAI because they can spend DAI easily in, say, a place where, like, where, yeah, in the place where hyperinflation actually happens, and then, like national currency are highly depreciated. For example, in Venezuela and also Argentina. And in Venezuela and Argentina, there's a lot of, we see a lot of DAI adoption there because people just don't want to use like Argentinian pesos or Venezuela bolivar. It's just way too volatile. And there's those, and then there's the second type of user, which is the vault owners. So these type of owners, the vault owners, tend to be a little bit more risk seeking. So they are very speculative as well. What they tend to do is that they lock up Ethereum in the smart contract, generate loans and DAI, and then use that DAI, buy more ETH, lock it up in the smart contract again to gain leverage. So and your question will be, why would they do that? Because people actually do long on ETH. If you look at the crypto market right now, it's slightly down, but but in the past, that's what people do. They just lock up like ETH, long on ETH, and generate loans in DAI. That's how DAI is minted, because of all these vault owners. And then if you look at the maintainers on the top, they are obviously developers, that are building the protocol itself, the infrastructure. And then with oracles, price feed oracles, where we take in, like price from different exchanges. I think that there are currently about 14 price feed oracles right now. So they are all very decentralized. The idea is that if one failed, there are still 13 others that make whole the system. So it's not like if it failed, we can't draw the price feed from anywhere. And then we have keepers as well. Keepers are usually bots where, human setup. So we have a keeper documentation where developers can actually look up and set up bots. So what is keepers functions? Keepers are to provide liquidity in the various aspects of the decentralized system. And these keepers actually participate in surplus auctions, debt auctions, and collateral auctions. Remember, I spoke about like liquidation. So when liquidation happens, what happened is that collateral will be auctioned off. So this keeper's bot will be hanging around the system and just wait and bid, for that, right price to buy over that collateral. So, and then we have the debt auctions as well, and surplus auctions. I'm not gonna dive too deep into it, but if you're interested, I will be sending Mayato the deck together with the white paper as well. You can read more about it, and if you have questions, you can actually ask me. Like even after the presentation. And obviously on the left-hand corner, there's the governors, Maker token holders. They are we have two different tokens in the system. So we have DAI, the stable coin, and then we have Maker token, which is the governance token. So Maker token holders play a very huge role in the system because they have the voting rights to vote on the very important risk parameters in the system. We're talking about collateralization to debt ratio, debt ceiling, stability fees, and a lot more. So, and then we also have an internal risk team that risk assess all these different collateral types and give them like, an initial set of basic values for all these different collaterals. So basically, all in all, risk team actually collect and compile relevant data and develop risk models and then Maker token, so that Maker token holders can actually assess it before they make before they actually cast a vote on Maker governance portal. And next slide, please. And so, so what is the system lines of defense? You know, like for example, if anything bad happened to the system, like Black Swan event. Black Swan, it's a very rare and critical surprise attack on a system. So it doesn't happen like as and when, but when it happens, it take you off guard, and then the system cannot respond in time to manage the DAI pack. So in times like that, what happened is that we will have these lines of defense mechanisms that help maintain the system solvency. So and like I said, earlier on, the system is always over collateralized. It must have more values in the collaterals than the value of DAI supply. So the first line of defense is supply and demand. So supply and demand of DAI is influenced by the stability fees, DAI savings rate, and DAI debt ceiling adjustments. So these are the different risk parameters. And then we have liquidation as well. Anytime when the collateral value of a vault gets closer to its debt, it becomes risky. So therefore, the system will actually liquidate the vault that become too risky. Next slide, please.
You have like 9 minutes left just for you.
Okay. Yeah, I mean, yeah, I'm gonna go quick. So, and then there's the Maker minting burning system, where, if collateral auctions cannot cover enough debt, within the auction period, the system will actually takes responsibility of this deficit in the form of bad debt. And if bad debt actually accrues too fast, there will be a burning, Maker burning, Maker minting system. More Maker tokens will be mint, and then it will be auctioned off to cover the bad debts. And then with emergency shutdown as well, usually we don't, we don't want to activate this emergency shutdown. It will be used as a last resort, in cases of extreme market irrationality. So these are the different systems lines of defense that we, how that we use to maintain that $1 pack. Next slide, please. So there's also another feature called DAI savings rate within Maker protocol. So what happened is that, let's say a DAI holder, right? This person has got 100 DAI. So he or she deposit like 100 DAI into this DAI savings rate smart contract. And then say the DAI savings rate interest right now is 5%. What happened is that after 1 year, right, you will get 105 DAI. So a person who holds DAI can actually lock and unlock DAI, at any point of time. So it's not like, like you have to, lock it there for like a year. You can actually withdraw it out after 3 months as well. And the DAI savings rate, it's not fixed. It's variable. It very much depends on, how that DAI pack actually does. And next slide. So through this smart contract system, we believe that people can truly generate the true version of peer-to-peer electronic cash. So which is, what Bitcoin was originally being set out to be, peer-to-peer electronic cash. So, but stablecoin, it allows anyone to actually send and receive, as long as they have internet connection, without people having to worry about security or counterparty risk, because now you are issuing loans against the assets that you own. You're not going through any intermediary party. Next slide. So why are we here then? DAI is being used in different aspects. So DAI is used in humanitarian aids as well. And then DAI is used as payment and cross-border remittance. And then DAI is also used on, a lot of other DeFi lending protocols. If you stake DAI on Compound, you get like, certain interest rates. And then, obviously DAI has got a couple of, real world use cases as well. Next slide. And so this is something that this is a very good use case. So we actually piloted with Oxfam and Australian startup called Sample last year, and getting DAI dispersed as cash aids. So when natural disaster actually happens, right, it is very difficult to disperse cash aids. Everyone will be all over the place. But with this system, government can actually distribute the card preloaded with DAI and allow the villagers to spend to buy something. And because all these transactions are actually transparent, right? You can actually it's traceable, so you can check it on online, and this actually allows both the NGO and also the government to track the transaction details. So we are entering phase 2, I think mid this year. So there will be a lot more to come. Yeah. And next slide, please. So, and like I mentioned to you, there are a couple more pilots, that that are in the pipeline right now. For example, the first one, invoice factoring. We are working with TradeShift, which is based out of UK. We are helping small, medium businesses to unlock liquidity. Because today, if you look at it, in the trade finance industry, there's about $9 trillion of capital being trapped in the outstanding receivables. For example, if I'm a small business, right, and then I get I'm a small business supplying, say, like cup to a restaurant, but usually the payment term is very long. So I'm a small business. I don't have enough cash flow. So I get that money after 3 months. By the time when I get the money, right, I'll be out of the business already. But see, what happened here is that imagine invoice or outstanding receivables are able to be tokenized, and businesses can actually use that tokenized invoices and lock it up in the smart contracts to generate loans, advanced loans. I mean, I think this is something where a lot of people are trying to vision and trying to envision that it's going to happen, and it will be very impactful. And indeed, it is very impactful. But the thing is, because like what Mayato was saying, the whole crypto ecosystem is still very premature or nascent. So like tokenization space, there's still a lot of improvement. But when we are able to do this, we are able to help democratizing access to financing for the entire world, small businesses. And then we have real estate finance as well. We are piloting this project right now with a project called Tin Lake. So in traditional finance, to borrow against real world assets, right, like home, house mortgage, you need the likes of Goldman Sachs or big banks, huge volumes, like good credit ratings, and so that the banks will actually issue loans to you. But so with Tin Lake, we actually did a pilot, and we managed to actually tokenize and finance mortgages in 30 minutes with fees of less than $1. So this is presenting an alternative to the status quo that is cheaper, which is what the banks are offering. So this is a new world that we're talking about today. And royalty payments, even in music industry, like Spotify, all these new artists, right, they upload their music and then they get paid 7-8 months later. They are like small artists, they don't have money also. So what we're trying to do here is that we work with a company that work with another company that pulls in real-time performance data from distribution channels, and they price these data points and use that data points and to basically to basically actually create a tokenized contractual rights to the royalty payment, so that artists can actually have draw down an advance of what they all these based on all these different data. And then we have commodities as well, which is not very liquid. You know, imagine tokenized iron ore, you know, can be used as a collaterals, and allowing these big companies generating loans against these this illiquid assets. So yeah, so these are the different pilots that there's still in the pipeline. None of them are actually in work yet, in production yet. So, but you know, these are very promising use cases that I'm talking about. So next slide. Oh, okay. So that's the last slide. So that's about it. And if you have any questions, I think we are entering into the FAQ session, right, Mayato?
Yeah, exactly. Thank you so much,
Yeah.
Jocelyn. I'm going to introduce Danny, who will be the moderator of the QA. Danny, you want to show your
I see a few questions here.
Danny, can you turn on your camera?
Oh, wait.
And then Jocelyn, I don't know if that's possible.
Yeah, that's fine. I forgot that. I forgot to turn on my camera.
No worry, people are looking at the screen, so.
Yeah. So they have a question. Is DeFi insurance useful? I think. Yeah. Is it we can do in a P2P insurance in DeFi? I think so.
Oh, okay, cool, interesting. Yeah. Thank you for asking that question. DeFi slash insurance is still very premature, you know, stage in this space. You can, I think, in DeFi insurance there are two, you know, ways to, you know, take this, you know, meaning. One is insurance for the DeFi, you know, protocol. The other one is traditional, you know, DeFi insurance, similar. You know, it works similar way in the traditional finance insurance. The latter part is more difficult because one of the challenges of DeFi is to connect to the real world. So if you're imagining about the insurance such as, you know, for car or for your life or, you know, for family or etc., life insurance, car, you know, insurance, it's more challenging because the blockchain itself cannot receive the data easily from the real world that, you know, instant occurs that, okay, your car is broken, etc. And then to verify that, you know, in the traditional, you know, environment, there are assessors who check, you know, this, you know, car is actually broken. But in DeFi space, since it's permissionless, it's more challenging. In the DeFi insurance, there is a system called the project called the Nexus Insurance that check the smart contract, you know, bag, you know, insurance for the smart contract bag of vulnerability. So if there's any smart contract bag and the user's asset is, you know, somewhat taken, the DeFi insurance covers. And then this system works very well so far because there are, you know, group of people who check, you know, whether the contract has, you know, has really a bag, you know, vulnerability in a bag, and then these, you know, people who judges the insurance risk, the instant permissionless and decentralized, really, you know, structured. So this one is. I think the state, you know, still it's very immature, but, you know, I think it's evolving, and then it has, you know, some potential.
Okay.
Yeah. Anything about Jocelyn, you can add on, or maybe for any question related to MakerDAO, maybe.
Yeah, we have a question. I think we have a question for MakerDAO.
Yeah.
I think how to be keepers on the DAO ecosystem. Yeah. Okay. Do you have to have Maker or any token?
Yes. So see, the thing is, the functions of keepers are to actually provide liquidity, right? DAI liquidity. So you need to, I don't think you need like Maker token, but you do need like DAI token though. So there is a documentation where I can actually send the link to Mayato later. You can look through. We have a couple of partners basically working on gathering all these keepers, onboarding all these keepers right now. So yeah, it's pretty technical actually. So and we do have community-led initiative as well to build a one-click GUI interface, so that like non-technical people can actually basically just become a keeper.
Okay. We have another question. What is the role of DAI token in MakerDAO ecosystem?
What is the role of DAI? DAI
Yeah.
is actually a stable coin. So it's so remember I said that, there's two tokens, right, in the system. There's Maker token and also the DAI token. The Maker token is more speculative because it does fluctuate. I mean, it is volatile. And whereas for DAI, we are trying to maintain it to, we maintain the peg to $1. So, so DAI is commonly used as payment actually in MakerDAO MakerDAO ecosystem. Or you can trade DAI, with USDC. You can trade DAI with ETH. You can basically actually trade DAI with anything on DEX's decentralized exchange. And one more thing, I mean, if you're talking about because MakerDAO ecosystem is very big, right? We have a lot of various stakeholders. We have lending protocols. We have DEXs using it as well. We have Synthetics, which is a synthetic assets trading platform that uses DAI. So there are various different use cases, for DAI.
Yeah.
Okay. We have another question here. Do you think
maybe I can just quickly add on that? So the DAI is truly revolutionary product in the DeFi space, and it facilitated a lot of user interactions more easy. Because if you imagine, like, you render, you like to lend someone at some point, and then if the crypto asset, Ethereum, Bitcoin, etc., usually like has a high volatility, and then the money that you rent out today will have a much price fluctuations in next month. So this with DAI, you can get back exact same amount with interest. So DAI stability was one of the biggest challenges in the blockchain. But with the system, decentralized system that keeps the token price maintained to, soft peg to the USD, it's much, more easier. It's easier for us to do, DeFi or, things. Yeah, thanks.
Okay. I have one question. Do you think Flash Loan has a future that hacked last month, right?
The BZX one, huh?
Yeah, BZX one, yeah.
Yeah, okay.
Mayato, you want to comment?
Sure. I really truly believe that Flash Loan has a future. Obviously, of course, you might be seeing some latest news that there was a exploit. There was a use for the exploit, but Flash Loan can be used because like smart contracts. It's connected, it's used in the smart contract context, and then in many cases there are still some complexity. And then, for example, if you if you want to issue the DAI in the MakerDAO system, and then you want to liquidate, you want to basically take it back your collateral, and then you have to have over collateral, usually more than 150%. Then, so you have to prepare a lot of collaterals first to, liquidate it. Or you want to switch your, collateral, but, this whole transaction makes, it's more complicated. But with a Flash Loan, you can, basically make this whole, complex 5 or 6, transaction in one single transaction. Everything is automated. And then from the user's perspective, right? I mean, in the smart contract, there are 5 transactions, but the user do not have to, borrow some money or get some money and then do some liquidation by themselves. But instead, the Flash Loan can do it. And then Flash Loan, of course, there is some, risk and challenges, I think casted to the community. But in the context that, users, renders can take advantage of, leverage position without taking any kind of risk, I think this is true innovation, and then there's a lot of use cases will be more in the future. And then I'm sure a lot of protocols put defense mechanism against the flash on exploit.
Okay, thank you.
Yeah.
We have another question here. Is it possible
Wow.
to apply buying digital asset by using installment? I think, yeah.
Is it possible to
using DeFi, yeah. Is it possible to apply buying digital asset? I mean, doing by using. So I want to buy something, but I do installment in DeFi.
So you mean like
possible?
If I want to buy 1 Bitcoin, I pay 0.2 every month for 5 months.
Yeah, maybe. Or maybe just pay maybe 1 Bitcoin, but you just pay 0.2 Bitcoin a month until 5 months. I think doing an installment on DeFi, maybe. Is it possible?
Sorry, what does instrument in this context mean?
Yeah, I think it's a digital asset. I think you buying a digital
asset. As in cryptos.
Yes.
So I think the person is asking, Mastery actually asking if it is possible to pay, on a monthly installment basis to buy cryptocurrencies. For example, if they don't have, like, say. But actually, but see, the thing is, I don't know if the concept is. I mean, like, it sounds inventive, but see, the thing is, cryptocurrency, right? Say, for example, Bitcoin, you can buy down to 0.00005. Like, you can buy just $100 worth of Bitcoin. I mean, it doesn't mean that you have to buy like 1 Bitcoin. So installment wise, I don't know if there will be, a use case for that, but because you can, and anyone can just buy any amount of like cryptocurrencies today.
Yeah. Okay.
That makes sense.
Yeah. I don't know the actual use cases so far. However, I know there is the smart contract that allows streaming payment, as a subscription basis. Which, combining that, smart contract with the decentralized exchange platform, which allows you to swap token X and Y, maybe that is possible. But you might have to lock your asset in smart contract first, and then monthly payment occurs accordingly.
Okay. We have another question here. I don't understand also. Are you considering other stable token aside DAI? DAI is pegged to USD. I think DAI is not pegged to USD. But now the biggest economy.
Oh, okay. I see. Yeah.
Sorry, you mean like pegging it to different currencies, is it?
Yeah, I think that's the question.
I think, yeah.
Okay. Yeah, I mean, we do have plans to actually peg it to, like different currencies, say DAI pegged to Chinese yuan, or euros, or even like, because now DAI is pegged to US dollar, right? So, I mean, it's part of the development roadmap, but I think at this juncture, the team is very, very, like busy, just, like considering different collateral types to back DAI itself. Because if you come to think about it, when we have the older version of DAI called Sai, it was just backed by Ethereum. And if Ethereum price crash to zero, right? I mean, there goes the entire system. So I think we are trying to diversify the system, diversify the risk of the system with a lot more different collateral types. This is the priority right now, and then we will move on to adding a lot more different, even tokenized real assets like tokenized bond securities, and mortgages, like I shared earlier on, and then later on we will peg it to different currencies.
Okay, good.
Yeah.
I have one question actually. Can you explain how actually DSR, DAI saving rates, right? 8% or 7%. How actually the smart contract give us the interest? So how do you get the 8% for us?
So, like I mentioned, that is not fixed. The rates is variable. Like it can go down to 0 as well. So DAI savings rate, it's being subsidized by stability fees because vault owners have to close down their debt with DAI, paying stability fees in DAI. So that stability fees, it's subsidizing DAI savings rate. I think at the beginning when we first launched multi-collateral DAI in November last year, it was I think 4% and then slowly becoming 8%. So and even DSR, it was also 4% and then 8%. So basically, the Maker token holders were not taking any commissions or fees out of it because like if you offset like both, right, it's 0 for Maker tokens. But so to answer your question, DAI savings rate interest is from stability fees. It's channeled from stability fees. Yeah.
Okay. We have one more question here. What type of collateral can be used? I think for DAI.
I think this question was asked during my presentation, but I can. For collateral, sorry, I should have thought about that first. But usually, in DeFi space, usually the crypto assets, everything would be crypto asset. So basically, the ERC20 or Ether as a token. But there are, anything can be collateralized in a sense. In this, Bitcoin itself cannot be, but mirrored asset of the Bitcoin can be, or some WBTC, which is Bitcoin asset backed, the token on as a ERC20 standard, form. It can be, put as a collateral and a DAI too. There's one project working on their real asset kind of interest rate as tokenizing a real asset interest rate in the actual real asset in the United States. That is form of ERC20. That can be also collateralized in the future. So it's kind of crossing the centralized finance and decentralized finance. Yeah, but for the Maker, maybe what are some collaterals can be used?
So you're right. I see. The thing is, the sky is the ceiling. So mixing tokenized real assets to MakerDAO or DAI itself, right? It's unlocking like traditional financial capital because right now DAI is only backed by crypto assets, but imagine when you actually add tokenized real assets like bonds and all these different real assets, it actually opens up a lot more potential, for DAI itself or the ecosystem as well.
Okay, so another question is there any fractional property use case for DAO?
Sorry, what?
Yeah, is there any fractional? I don't know, is the previous slide. Is there any fractional property? I not really understand also the question.
Can you see the question in the chat?
Yeah, you can see in the chat, yeah.
I don't know where's my chat right now.
Oh, if you see the Zoom link, on the bottom, next to the share screen.
Yeah, got it. Okay.
Yeah.
Fractional property use case for DAO. Okay. In the previous slide, I think Jocelyn not mentioned about this. Or is it unrelated? Fractional property. You mean like a tokenized property?
Yeah.
Yeah, I think so.
I think so. Yeah.
Okay. All right. Yes, she said yes. So she said yes. So there is tokenized. We are piloting, I think, a project. There is a use case in New York where I can't remember the name of the project. So basically, this project actually tokenized property, and we were piloting it. So basically, just piloting and see, whether or not it's possible to actually use tokenized real world assets like property as collateral. So, but see, the thing is, one thing that I realized about property is that like every country, right, has got different system of keeping track, like title deeds. In India, right, it's so big. So every state, some states might not even have a system to actually keep track of title deeds. And then when you sell away the house, right, or like when there's a change of hand, who keeps tracks of all those? So these are the things that are not being ironed out yet. So, but until then, like we can talk about like tokenizing real estate. But I do know that recently there is a project called, I think, Mayato, do you remember, like REITs or something like that? I can't remember. I need to.
In New York.
No, not in New York, but there's also, I think, yeah, in New York, you're right. There's another one, new one. I can't remember, but I can find out and then send the link to everyone. Yeah, Realty, yes, Realty.
Yeah, that's the one that I experienced. Tokenizing the real asset,
Yeah. So, but see, the thing is, I think it all starts small, right? We can actually start from, I don't know, say New York first, where I think, tracking system for properties are very much, like established. In Singapore as well. You can just go to, say, land, you are a urban development authority website, and then you can look at, all these different, houses and see if they have changed hand and things like that. But I think in developing world, there's still lack of like proper tracking system. So which might be an issue as well.
And then I don't know, that question asks, use case for DAO, decentralized autonomous organization. I don't know if that is possible with the traditional finance, because in traditional finance, you have to have, basically the licensed, the financial institute to act for, property, that's my point.
So, I don't know, like we are a DAO, right? A decentralized autonomous organization, but like eventually this DAO, MakerDAO will be dissolved, and then the community will take over. But it's really up to the community to decide whether or not they want to see like tokenized real assets like properties in it, and then they can actually work with different. As long as it is decentralized, I think it can be a good collateral.
And actually, I have one question.
Hey, Danny. Do you mind if I actually ask question to Jocelyn, because I have
Okay, it's okay.
No, nothing technical. I know the MakerDAO system is quite complex for general end users to understand at first glance. And then, do you think that user has to understand the whole mechanism of the MakerDAO system, including a keeper, bot, etc., etc.? What do you see in the future of the mass adoption?
Well, so like what I mentioned earlier on, right? There are two types of different users. There's the vault users, or previously we called CDP users. So they are more speculative. They lock up Ethereum or all these or basic attention token or USDC to generate loans and die. So these people are more, these group of users are more speculative. So, but you can be just a normal DAI user. Like, I can tell you that I'm a risk averse person. I don't want to go and open a vault, and then, and then basically, just looking at price of ETH and see if it falls. If it falls below, I need to quickly, top up more ETH in the system so that, my position won't get liquidated. I'm not that sort of person. So what I do is that I personally actually lock up DAI and DAI savings rate smart contract and earn that interest. So it used to be 8%, which is more than what I can ask for here in Singapore. The savings bank savings account rate is only like 0.05%, and if you like fixed deposit is only like max 1.8%. I think it's the same in Indonesia as well, right? So
Indonesia is 4%, I think.
Yeah, 4% is still it's still pretty low,
4 to 5%, yeah.
factoring, like inflation every year, like it's about, like 3-4% depending on which country also. So and yeah, so what I'm trying to say is that you don't have to really understand the entire, like system, the protocol to really use DAI. But obviously if you want to really, be risk seeker and start, like locking up your ETH, you better understand, the entire risk that is involved, the smart contract risk, and like and so basically if ETH price falls, what's gonna happen, after liquidation, all these things are gonna have all these different steps are gonna, take place and stuff, auctions. I mean, you don't have to really run a keeper board because, there will be, I mean, the systems is built in a way where different stakeholders, right, or different players, external players will come into the picture and they are incentivized to bid and buy that auction collaterals. So I mean, depending on your knowledge about the system, or and also how technical a person you are, you can take on different roles.
Yeah, yeah, it totally makes sense. I mean, for people here, you don't have to know the monetary policy of the government, OJK, how to issue, the IDR or something. But you use it in the daily life, But if you are the one who will issue, then you have to know about how system works.
Yes, exactly. So I mean that's a good analogy. And also, I mean, looking at the whole ecosystem right now, right, and also the users demographic, a lot of the people who actually generate that uses vaults and generate loans and DAI, right, the vault users, they are all in developed countries like US and Europe. And then the people that actually uses DAI and lock up DAI and DSR are mainly in developing countries, in Southeast Asia and also like say Latin America. So I mean, this is something quite it's a interesting insight,
Yeah.
Yep.
Cool. Maybe the last question.
Yeah. I think, is there any event DAI token in the near future? I mean, listed in exchange. Someone asked when DAI listed on Binance.
The same guy. Same person.
Okay. DAI is listed on a lot of big exchanges. We're talking about Coinbase, Kraken. I think in Asia would be I think Liquid, Japan-based, but actually they're headquartered in Singapore. So and we have a big news coming up, and keep a lookout in Indonesia. I mean, I can't say it for now until it goes public. I can share, but we have DAI is going to be listed, in one of the Indonesian exchanges. Yep.
Oh, nice.
Yep.
Oh.
So you can buy DAI once it is listed.
Yeah, good. I think that's all the question.
All right.
Yeah.
Thank you so much, Jocelyn, for attending such a late night in Singapore, and then for everyone to attend this session too.
Thank you.
Okay, good. Thank you.
To follow.
If I may, I can talk further about some of the few slides that I didn't explain, but for Jocelyn, maybe it's too late. Maybe we will say thank you and clap our hands for her.
Yay. Thank you.
Thank you so much.
Thank you so much. Yeah, I know. I mean, it's during time like this, everyone is still staying. and watching DeFi channel. Thank you, everyone, and stay safe. Hey, thanks, Mayato.
It was super engaging. Thank you so much. Yeah.
I know.
Thank you. Thank you, everyone. Yeah.
Okay. For those who are still stay here, maybe I can explain about a little bit further on the DeFi slide that I didn't explain quickly. Okay. So I think in the slide, I talked mostly about the user's perspective, how, DeFi changed the world, or how, DeFi is used. Now I'm going to talk about, is DeFi just, this is it? The answer is no. DeFi, the innovation aspect of DeFi is found from the developer environment. What I mean by this is DeFi. Imagine the world that financial, services, usually, banks, security companies or brokers, etc. Only available for those, who have high capital, efficiency, and who have, a lot of investment. It requires a lot of, upfront investment, because you have to build a secure network for the user's asset or banks, But DeFi can crack these things, because not only it's open source, a lot of protocols and developing, DeFi, is open source, but because, users' fund is secured by the cryptographic blockchain protocol, which tend to be super costly for financial institute. So you don't have a, stable, bank, system, but, this, Ethereum network, entire ecosystem can, secure the asset of users. And then this is permissionless. Right now, you don't need any license, I think, to do this at some point, some places. Maybe you have to check with the regulators, but DeFi space, in order to build the service, it's similar to you build the application on Apple or Google. Similar to build an application there, you can build the permissionless crypto decentralized financial applications, and then you can deliver that product to the global community instantly, because everything is through the internet and then blockchain Ethereum network. And then you can also build upon the other existing DeFi protocol. Imagine the world that you can use DAI, you can use Compound or some other protocols, and then you can build some product on top of that. Easy, right? So DeFi and then works as in the whole system. It's quite revolutionary, and it will make an impact to the financial industry, like the internet did to the media industry. This is a phrase that I use for, because before internet exists, the media industry was pretty much dominated by the TV production company and the newspaper company. But after the internet was born, a lot of people start sharing news or information on blog as individual blog, and right now YouTube is taking a share of the TV, but these are done by individuals. DeFi potentially can do the same things in the finance industry, which are kind of predetermined, dominated by small number of players. But anyone can build a product, and then anyone can ship the service to the global community. Yeah, so that is the actually good part of DeFi. Oh, sorry. Oh, okay. What happened? Uh-oh. Sharing this stuff. Oh, okay. I'm sorry. Yeah, this is it. Thank you so much. I'm happy to take any questions after on the DeFi Telegram chat. Here. Sorry. Yeah. All right. So this is it for today's event. Thank you so much.
Yeah. Thank you, everyone.
Yeah. Okay, I'm gonna cross Zoom, right?
Yeah.
Okay. Yeah.
Thank you.
Oh, by the way, we're gonna post probably this video later on YouTube, and then I'm going to host another event, sometime soon in Jakarta. Once the situation, coronavirus situations, settle. Yeah, just stay alerted, and then yeah, we're gonna bring more information later. Thank you so much, guys.
Okay.
Yeah, stay safe. Yeah, everyone stay safe.
Stay safe.
Semoga Sehat. Yeah.
Semoga sehat.
Yeah.
Okay, see you.
Bye.